ericmother.com for the weekend analysis for August 1st and August 2nd, 2015. Let's take a look at how markets closed on Friday in the US. We see that pretty much a mixed bag, slightly to the downside, with the Dow down the most, about 0.32, and we see that crude oil ended the week down about 2.89%, and gold was up about 0.59%. For the week, S&P 500 was up 1.16%. For the week, the Dow was up 0.69%. For the week, the Nasdaq was up 0.78%. For the month, the Nasdaq was up 2.84%. For the month, S&P 500 was up 1.97%. And lastly, for the month, the Dow was up the least, up 0.4%. So let's take a look at the charts. Now I'm hoping this weekend's market analysis video is going to be short, and the reason why I say that is I don't see any indication of which direction the market is pegged to go, and there's a lot of evidence for sideways action, or at least a little bit of indecision for now on my charts. And if you take a look at this wedge here, you can clearly see that we are trading in the middle of this wedge. We are not above it, not to it, and so tough to tell which way the market wants to go. And we're also trading just slightly above an upward sloping 10-week moving average. So really the market is not doing much. If the Nasdaq is to break out on a weekly chart, it needs to move above 5,214.00. So if it can move above that threshold, that would be a fresh weekly closing high potential. Otherwise, right now we seem to be trading in a sideways market. We take a look at the Nasdaq on a daily. We can see that we bounced recently off the 50-day moving average, and now if you take a look at the top side, we see that previously we had come back to resistance on this line, and once we hit that level there, the market stalled. And then on the way down, the market recently came back to support on this green line here. As you can see, again, support held there, and since then we've been up. So we are pretty much in a sideways market, in my opinion. We are not at resistance and we are not at support, so tough to tell which way this market is poised to go in the short term. For anybody looking for a swing trade direction, take a look at the Dow. You can see while it was making these highs here, the highs there, the market was doing so with declining technical strength. And most recently we came here, we hit that line there, and there was a pullback for about 2 weeks off the highs there. But now we see that the market found nice support exactly where we were expecting support or break. Right now the market is showing support, so one has to assume that indication there is that week to week the Dow could move higher. So again, we see another level of evidence that the market is not giving us any sell signal or any buy signal. We seem to be pretty much stuck in a range. On the downside there is support, and every time we come to the top side, at least recently, we seem to be running into resistance. Take a look at the Dow Daily, and again we can see that we had come off the highs here and here because the market hit resistance, and I'll show that to you. So market hit that resistance there, both highs came on that line. So the market did pull back. We seem to be holding generally around an upward sloping 200-day moving average, which is generally okay. And also we see that the market did try and break but held when it came back to this line here connecting RSI lows on the daily. And since then, since this most recent support here in the last week or so, since the support there, market has bounced up slightly. So again, we see another chart telling us the market looks to be poised for some sideways action, because we are not trading either at resistance, for a swing trade down, or we are not trading as support for a move higher. Take a look at the Dow Transports, which actually had a nice bounce off this level here. Very nice bounce. Seems like it's a triple bottom. over the last couple of weeks on the weekly RSI, and so now it has a chance of moving higher. That's impressive. In fact, if you take a look at the transports from a 5-year weekly chart, the very line we've been talking about the last couple of weeks that could be support has come into play nicely. As you can see, we were expecting support on this line based on this breakout here in late 2011. So off the lows here in 2011, market has moved higher since then, hasn't looked back. And so we can see that this green line is where the market has been coming back and showing nice support. And the speculation was that even with this most recent support late 2014, we were thinking that this could actually be an area where the market could find support and move higher. So that was correct. And we were suspecting if support was not seen and the market were to break, that would have been bearish. Right now we see that the market itself has decided to hold support on the line we have been watching on the weekly RSI. I think that suggests net that the Dow Transports are starting to build their charts, which seem to be broken there for a while. We take a look at the daily, and there's two views on this daily chart. Depending on how you want to look at it, you can say that this is a breakout of a nice RSI wedge. So one can say that this is a breakout over the last week and the market is poised higher. So that's one way you can look at this. But I have another view, which is to think, and I suspect that this is probably the right way to read this, is the Dow Transports have just come back to where they've been stalling. This line here corresponds with the highs during that peak there, corresponds with the high here during this peak, corresponds with the high during this peak. We came close and touched that line there, kissed it and pull back, which is this high, and now we are doing the same thing over the last 2 days or so. So clearly, if this is confirmed as resistance and the market can't move above the green line or the red line, indication is that we are poised to go lower. If the market is to move higher, then obviously it needs to take out that red line by breaking out above it. I think for now, my thinking is, and I'm leaning this way, that this is more than likely giving us a short-term sell signal as far as the daily chart for the Dow Transport is concerned. If we take a look at the S&P 500, now this week we were watching either for the S&P 500 to hold above 50 on its weekly RSI, suggesting an up week, which is exactly what we got. And keep in mind the S&P 500 has been bouncing on its 50 going back about 3 years or so. Every time it comes to the 50 RSI level, it has held and bounced to new highs. It held here around the RSI 50 level and bounced to new highs, which was this lows. Again, we had uniform activity below 50, back above it for a nice re-entry. Market went to new highs. Again here, the same thing, we bounced at 50 and the market did go to new highs. And now we seem to be forming a nice double bottom on the weekly RSI. And as long as markets are showing this type of behavior, more than likely one can expect that over time, as long as the S&P 500 is holding above 50, one can expect the market to move higher. So the weekly looks good based on the support. We take a look at the daily RSI, and again, just like we had seen on the Dow, the most recent low on the S&P 500 came on this line here, and this line corresponds to the RSI lows on the daily. And so we hit this at the beginning of the week and bounced, and also that corresponds with support at the 200-day moving average. Over the last 2 times the market has come to that level, the 200-day has held. So we've bounced since then, and keep in mind every time we try to move higher over the last couple of weeks, the market would come and show resistance on this very clearly defined line. So yes, we are stuck between those two range. We have resistance on the top and we have nice support on the bottom, and that's why I say in this week's video, tough to tell which way the market is poised to go short term. Now if we go back to the S&P 500, just want to sensitize you to something here, which is where the S&P 500 is trading. Closed the week at 51.78. So if something happens maybe over the weekend or in the beginning part of the week and the market cracks below 50, expect at least there to be a big down day. So on the day, if it happens that the S&P 500 cracks its daily RSI below 50, expect a big down day. Now if we take a look at the S&P 500 on the hourly, and on this 6 months hourly chart, We also see that the RSI closed slightly above 50. So if the hourly RSI cracks below 50, expect a big down open if that takes place in the coming week. But keep in mind also, there is a line here off the highs right there. The S&P 500 broke down there, and we can draw a line from there like that. And you can see clearly that every time since this break off the highs, the market has been showing resistance on this line for shallow pullbacks. Resistance here for a pullback, and then again we broke below the red line for this high here and a pullback. Over the last couple of hours on the trading, we see that the market has formed a double top as far as the hourly RSI is concerned, and that suggests that hour to hour the market could have given a short-term sell signal, suggesting maybe a slight pullback at the open of the new week. Now let's take a look at Apple, and I'm going to use the 5-year weekly chart to explain something here. So of course this is the 2-year weekly chart right there, and on the weekly I just want to show you that Apple has come back to a level on the weekly RSI where it has been finding support for quite some time. Every time it bounces on the 50, just like the S&P 500, it tends to do well and move higher. Bounced on the 50 here for another move higher. Bounced on the 50 RSI level for another move higher. So right now what I believe is going on is the stock is testing this 50 level. If this can hold, if it can weave itself back above 50, then that will be around here where it finds support. So depending on what happens around the 50 level, I think one can glean what the direction or the next direction is going to be. In fact, if you go back to 2010, even during the lows here, the market held around RSI 50. The lows here in 2010, the market held with RSI around 50. It held here again, bouncing back above 50 during these lows. It touched the lows here on the RSI around 50, and the prices made short-term lows. And you can see that since then it's also been doing that recently over the last 3 years or so. So it's quite obvious here what's going on. Above 50, the stock looks good. Otherwise, if it stays below 50, then this is a change in sentiment. Just like we had this drop during this period here, corresponds with the Apple staying below 50 on its weekly RSI. I hope you can see that. So we cracked below 50 here in late 2012, which was off the highs there. Market went down. During that period, the RSI stayed below 50. So if you're a bull in the stock, you'd like the stock to be above 50 on the weekly RSI. If you're a bearish, you'd like the stock to continue trading below 50. There's also an argument that the stock broke short-term support on its weekly RSI, and as long as that's the case, in other words, if it's trading below 50, the stock is bearish. It tends not to do well when the RSI is below that 50 threshold. As I mentioned at the beginning of the video, more than likely this was going to be a short video because the market seems to be in an undecided position right now. Tough to tell. There's not too much to read in my opinion. If we take a look at the monthly here, we see that the Nasdaq is the only major average that managed to close at fresh monthly closing highs, or at least recent monthly closing highs, and the level there that it needs to hold above is 5,070.03. So for the new month, as long as the Nasdaq is holding above that number, it means that the monthly chart looks good. We continue seeing that the RSI continues to hold above 69.1, which is a strong market. So if it can continue holding above 5,070, that's good. That's an indication of momentum. Otherwise, if for some reason you see that it is trading below that number during the month or the new month of August, that would suggest that the market is bearish, and probably the market should be a little bit avoided, or one should be very cautious. We take a look at the S&P 500 on the monthly, and we see that the S&P 500 just closed just a tad below the previous monthly closing high, and so it now has an easy chance of breaking out above 2,107.39, which happens to be this monthly closing high. So in the new month, if you observe that the S&P 500 is breaking out, any breakout on the monthly would suggest that the markets are strong. Keep in mind, if it breaks out, more than likely it's going to be pushing its monthly RSI back above 69.1, which would be a sign of momentum back to the bulls. If it fails to break out and the Nasdaq fails the breakout, that's an indication of a market that is going down. Otherwise, if the S&P 500 is breaking out on the monthly, I think it makes a lot of sense to be bullish and to play momentum stocks that are breaking out. Let's take a look at the Dow in conclusion here. And the Dow obviously is not breaking out. In fact, the Dow is a little bit removed from its previous highs. And even though I don't see the Dow rushing to break out for now, we have to look at this and say that if the Dow eventually breaks out above 18,132.70, that would be a fresh monthly breakout. But for now, it looks like that's going to be ways off. Also keep in mind, and I talked about this last weekend, the potential here is, and the risk is very easy, or the risk is that the Dow could actually break to 3-year lows. If the Dow breaks to RSI 3-year lows, that's going to be a major sell signal and could indicate that now we are going into a fresh bear market situation. Keep in mind that one of the MACDs has already moved below to 3-year lows, or is close to moving to 3-year lows. So that's the risk. The risk is that the Dow could break down. A breakdown in the Dow would suggest that, generally speaking, we are going into a bearish phase. So that's one thing we should also keep in the back of our mind here, that it won't take much to bring the Dow to fresh 3-year lows on the monthly RSI, and that would be a major red flag. If that happens, I would assume that the market is going to go into a major bear market. Eric Muadid, Muadid.com. Enjoy your weekend. Good luck. Peace and blessings. O-E-A-C-S.